You know, a basic question for every day trader, and frankly for any swing trader, is do we have directional bias? And I think every trade, I'm going to put this right at the top because it's so important. Every trade must start with directional bias. That means a path of least resistance. Okay? And that also preferably means a trend. Okay? And then a trend is preferably identified, right? I mean, I know everyone has different ways to identify trends. For me, a trend is preferably identified by, as I call them, the double green, which is the study, all right, of the 8, 13, 21, and 34 period EMAs. Okay, so that kind of lays the foundation. So let's run through the markets here. Let's run through the 4 indices and how we can assess, all right, how we can assess all this. All right, let's start with the easiest place, which is just the color coding of the top and bottom rows of the JT multi-trend. This is my double green. More importantly than being bullish and focusing on, as we know, buy the dip, right? Or buy the you-know-what dip, as the battle cry often goes. More important than that is, what am I not allowed to do? I'm not allowed to short. Okay? I can be flat, I can be long. Preferably, my day trades are also going to reflect that directional bias. Watch how more effective your day trades are when you are trading with the path of least resistance. You might say, daily time frame and a 1-minute chart? Really, Raghee? Yes, really, right? Listen to me now, believe me later, okay? So why am I still bullish the S&P and the NASDAQ? Well, it goes right back to the double green of the JT multi, all right? Which, by the way, is an indicator that we make available for the members in the room drive, in the futures room, and actually in the Sector Secrets Mastery room as well. Okay, so not only am I focused on buying the dip, I'm actually not allowed to short. And these are the 2 trending indices, right? These are the 2 trending indices. So that then takes us over to the Dow. The Dow has not been trending since the middle of June. Right? We have not seen trends in the Dow since the middle of June. Right? A lot of volatility, back and forth, back and forth. Would I be mostly bullish the Dow? Actually, I would be, because every time we've had chop, as in the yellow lower row of the JT multi, right? The trend that preceded it was up, so that even in chop, my preference is still going to be for long positions, but instead of trend following pullback buys, it's going to be oversold buys, right? Fading the floor, if you will. Now, I'm not super thrilled about trading chop, not when I have trending indices and frankly trending sectors. I mean, let's think about the best corners of the S&P and the NASDAQ. XLV, healthcare. XLC, communications. I mean, XLK looks pretty darn good too. So there's corners of this market that are actually quite bullish. And these particular sectors are not random, well-chosen bullish examples. All 3 of those, the XLK and the XLC, number 1 and number 2 weighted sector in the NASDAQ, XLV, number 3 weighted sector in the S&P. All right, so think about the composition of these indices and the high concentration weighting that moves them. All right, so then the 4th index, I don't really call it one of the major indexes, but it is the Russell, okay? Now, those of you that are in the mastery probably know, and we might have talked about it in the futures room as well, is I was looking at this area as what? Closer to the 2100 level and the 200 exponential as an oversold buy. So then the question becomes, how much of this is just a bounce If you want to look at choppy markets, here's what I'll tell you. If you're in a choppy market, identify the range, so identify what the high and the low are, and just cut the range in half. An easy way to cut the range in half would simply to be just this. I'm not doing fib work here. I'm just, trying to show you what you can do. Just cut the range in half, which actually, that would be it right there. Okay. Halfway through that range is, oops, I didn't mean to do 3 of these. Halfway through the range is usually a pretty good point at which we could fatigue. Half of the range, 50% of the high to low range. Okay. But in the middle of a range is no man's land. Your opportunities to buy, because the trend that preceded the chop was up, is going to be the lower zone of support. Okay. Yes, you can fade the upper end of resistance, right? This area here, but preferably you'll focus on the long in this area. And then if you are in a position like this, I would use this as an initial fatigue level. Okay. I don't believe we're necessarily just going to about face and get crushed. If we do head lower, frankly, I think it just might give us another opportunity in this area and just fade the range one more time. Okay. So, as we progress in this conversation, and we'll delve into this more, we're going to talk about some volume levels and some specific candle levels that lead me to believe that we're not done yet. And I'm going to show you the importance of looking at the daily time frame, not only as a day trader looking for directional bias, but also for those of you wondering, what is the chance we might retest some of the recent highs? I'm not actually forecasting new highs because there's a huge obstacle in the way. That's the recent high that we pulled back from. But what makes today's candle so important, and what are the things that I'm troubled by? And we'll dive a little bit more into that a little bit later. Hey traders, Raghee from Simpler Trading. Thank you so much for watching this video. Be sure to leave a like and a comment below. And remember, subscribe and click the bell icon so you'll get notified of the next update. And when you're ready to join me for live trading, be sure to head on over to simplertrading.com. I'll see you in the next update.